Canada's housing market is slowing and is expected to continue to slow as inventory rises. Supply of resale homes has risen by 3% in the second quarter of 2010, while demand has fallen 9% during the same time period. The new CMHC rules that came into effect April 19, 2010, combined with the HST, has caused a massive run-up in prices, with multiple offers being the norm in the first quarter of 2010, which added fuel to the decline in prices and the lack of willing buyers. Housing sales in Toronto have fallen 34% in July from the previous month, and prices have declined an average of 3.3%. Vancouver and Calgary were even worse, and this is all happening when fixed and variable interest rates are extremely low. I would expect this trend to continue until at least the second quarter of 2011. Employment numbers for Canada and the U.S. released today are also terrible, with Canada expecting to gain 14,000 jobs but actually losing 9,000 jobs, and the unemployment rate edging up to 8%. The U.S. was even worse, as they expected to lose only 61,000 jobs but actually lost 131,000 jobs. We will most likely see one more interest rate hike this year, since Carney seems to be committed to this. But then I expect rate increases to stop. Mike Carney will have to wait to see, going forward, how the Canadian economy unfolds, and for the U.S. to start raising rates, which at this point will not happen until 2012 and beyond. The Bank of Canada can only start raising rates again if the threat of inflation is there and the U.S. starts its tightening. But from my perspective, I don't see this happening, and if deflation sets in, we could see low interest rates for some time, and more stimulus spending and easy money. The two increases the Bank of Canada has done already has worked better and faster than anybody could have predicted. So more interest rate increases could have a negative effect on the economy, which nobody wants. People will need to feel stable with some security, and housing prices will have to stabilize before they will start borrowing again, and climbing interest rates will not